Gibbs Wealth Management's Aaron Gibbs joins me now. First of all, I got to ask, I mean, we've got a horrible global situation with two wars, one in Europe and a growing one in the Middle East. We've got rising interest rates. Inflation didn't look so good from last week's numbers. Are you surprised the market is rallying?
Absolutely. I would have considered this. Typically, when you get headlines around war or any big conflict, you get more of a sell-off, a risk-off trade where you sell out of equities, flight to treasuries type of thing. That really hasn't happened in the last week, and certainly not obviously not today. So the fact that the markets are just brushing it off is definitely unusual. It's not the typical pattern.
Could that change if something goes really wrong?
Absolutely.
In the Middle East?
And that would be more typical. Generally, when we get headlines about concerns, my only explanation I could say is because we were already in such a conservative risk-off trade where obviously yields were going through the roofs. We had the worst September, that type of thing. I think that's the only backdrop that can be explained where people are already saying, you know what, it's already disastrous. So it would really have to be something big to shock it. And obviously now we're focused on Q3, which we hope will shape up to be better than expected and potentially end 3 quarters of earnings contractions.
Now, we had a headline in the Wall Street Journal today suggesting that we may have avoided the recession. We may get this soft landing. On the other hand, New York manufacturing numbers came in. They were better than expected. It was supposed to go down 7%. Instead, it went down 4%, but it still went down. I mean, is it too soon to say that we avoided a recession?
I think so, only because, one, it was New York State, and so manufacturing is less than 10% of the GDP. We are, obviously with Wall Street, we're a big service state.
Right.
So I think when we look at some of the more general numbers, even manufacturing across the U.S. is still a smaller percentage. It's really about those services and what the consumer is buying. Because that's what's been driving, and that's what I'm going to be looking at during earnings season, is particularly the consumer communication services, consumer discretionary, consumer staples, how those not only report, but also how they're looking forward in the fourth quarter and going ahead into next year. Because when you look at the revenue growth for 2023, we're only expecting 1% revenue growth. That is well below inflation.
Wow.
So that means that people are spending.
Are losing money.
Yeah, people are spending less. And so we really want to see a ramp up for next year, potentially with revenue finally getting ahead of inflation.
Aaron Gibbs, good to see you. Thank you so much for being here. Appreciate it.